Hi, this is Jeffrey Cohen, April 4, coming to you with the top 13 high-yield stocks. Top high-yield dividend-paying stocks. Number 13, Tapestry Incorporated. 1.8% dividend yield. Scored a better than S&P 500 Chicago Quantum Net score. Expected return is 15% for the stock over the year, including the dividends. The last day volume is right around where it is for the year, and it's trading at 89% of last year's price, so it's slightly at a discount for last year. Number 12, Qualcomm, coming in at a 1.8% actual dividend paid last year. Expected return 15%. This one has a lot of volume, 212% of last year's average, and is trading right around last year's average price. Number 11, Ares Management Corporation. Whopping 2.9% dividend. Expected return for this lower risk stock is 14%. Volume's down for this stock on Friday, 58% of last year's average, and this stock is up 18% over last year. Number 10, Innovative Industrial Properties at a 2.9% dividend. Expected return is 14%, inclusive of the dividend. This is trading, a whopping 700% of the average volume last year traded last Friday, and it's trading at 94%. So what is a top 13 dividend-paying stock? Number 1, pays a dividend higher than the S&P 500 index ETF. So it's more dividends than a highly diversified portfolio. Number 2, it has positive net income. This is a profitable stock, and we're not talking about adjusted EBITDA. We're talking about bottom line net income to the shareholders. Number 3, it's a liquid stock. It trades every day, and it passes our data validation. No monkey business. Number 4, it's a U.S. listed stock. It's listed on a U.S. stock exchange. So you should be thinking New York Stock Exchange, NYSE American, NASDAQ, BATS. These are not foreign stocks. They're good old U.S. stocks coming under the auspices of the SEC and FINRA. And number 5, they are more efficient than the S&P 500 index. As of Friday market close for a year, higher expected return with lower historical risk. That's what makes them. So, number 9, BROADCOM. You've heard of BROADCOM. 3% dividend last year. Expected return is 13%. Volume is down slightly, and the stock is up 21% over last year's average. Number 8, the Carlyle Group. Investment advice, investment expertise. 2.1% dividend, right? Scored nice and high on the CQNS score. 15% expected return. Volume down slightly on Friday from historic averages, and the price is up 3%. Number 7, T. Rowe Price Group, coming in with a 4% actual dividend. I can't remember the last time I earned 4% on my money in the bank. This is amazing. 12% expected return. So the stock is not a very high beta stock. 1/3 of your return is going to come through a dividend. It's trading at 100% of last year's average volume, and it's at 82%, so it's down 18% from last year. Coming in at number 7, Piper Sandler Companies, 4.4% dividend. Comes at a 13% expected return, inclusive of dividends. This stock is trading pretty hot too. It is 147% of last year's average volume. It's trading at 96% of last year's average price. Number 5, Guess. Yes, Guess Brands. 3.4% dividend last year. Scored very, very high in the Chicago Quantum Net score. As of Friday, expected return is a whopping 19%. This is a high beta, high risk, high return stock that paid last year a 3.4% dividend. Trading only slightly higher in terms of volume at 107%. And 96% of last year's price. So this is not one where the price has been run up already. Blackstone, another investment manager, 3.6% average dividend yield, actual dividend yield last year, coming in at a 4, which is a very good CQNS score. Expected return is 16% for the stock, inclusive of the dividend. Volume is way down, 55% of last year's average volume, and the stock price is up. So this is a stock that's been doing well lately and is kind of slow. Not a lot of people paying attention. Number 3, big surprise, Dillard's. Dillard's, the retailer, 7.7% dividend last year, coming in at the highest we've seen so far, CQNS score. Expected return is 21%. This thing has been moving with the S&P 500. Volume is down, 49% of last year's volume. And the stock price is up 32% over last year. People are willing to pay. Number 2, APAM. Artisan Partners Asset Management paid a whopping 8.1% dividend last year. Expected return is 15, so more than half the expected return coming from the dividend. Trading at 65% of last year's volume, so it's down, and 88%. Drum roll, please. The number 1 dividend-paying stock, Buckle Incorporated, paid 17.6% last year. In fact, is only expected to return 16% next year. Is slightly better than the S&P 500 from an efficiency perspective. Volume is way up, 175% of last year. The last day price is 85%. That's versus 100% if it was trading at last year's number. And just for giggles, I'm going to show you stocks 14 through 22 and just read them quick. NXP Semiconductors, KLA Corp, Analog Devices, Vitreous Investment Partners, Ameriprise Financial, TE Connectivity, Skyworks, Element Solutions, Toll Brothers. These did not make the top 13. Their yields are not necessarily better than the S&P 500 index, but they do rate mention. So thank you very much for listening. If you want to learn more, come to our website. It's www.chicagoquantum.com. Thank you very much. Have a great day and good luck in the markets. Make a ton of money. Bye-bye now.